What's up, everybody? Welcome to the Stocks channel. Today was FOMC and we had plenty of fireworks, and the bank account is now up over 54% year to date, continuing to make brand new all-time highs in this very strong bull rally. We are absolutely crushing the market on Bank Trade Alert, so if you want to come crush the market with us, you can find out how to join Bank by clicking on the link below. On top of that, the most voted for stock was Nvidia stock, which was no surprise. That is the stock I thought most of you would vote for, so we will also be doing technical analysis on Nvidia stock for the remainder of the year. Alright, so looking at SPY, we were up 1.38% today, and we blasted right through that price target at 467, which was our price target above 462, and now that we're above 467, we're likely going straight to the previous all-time highs in the 470s. Now, the Dow Jones did make a brand new all-time high this year, and earlier in the year, I told you this was likely a bull market trying to make brand new all-time highs. And one of the ways I did that was simply by looking at Berkshire Hathaway, which had made a brand new all-time high in the month of September. And if you zoom out, you can see that was a very clear breakout to an all-time high. And when you get indications like that in the market, those are early warning signs the rest of the market is likely going to do the same thing. And lo and behold, if we look at the Dow Jones, you can very clearly see from the weekly chart that we have blasted out to a brand new all-time high above 370. So with the Dow Jones at brand new all-time highs, it's very unlikely the SP500 and the Nasdaq100 are not going to do the same thing, but that obviously doesn't guarantee we're just going straight there. There's always the potential for volatility and cooldowns along the way. So the things I want to highlight tonight are the next price targets up here at 475 and just below 478, but we are outside the upper Bollinger Band, and it is likely with the breakout at 467, we could come back down to test this zone as support before going any higher. And it's even possible with this overextension that we come all the way back down to the breakout right around 458 to 460, test that level as support, and then proceed higher to the previous all-time high later in the year. So it is possible that even though we are going higher, we could go lower first and test that breakout because we are getting a little overextended. Now, as I always say, make sure you have a plan for either scenario, and the other scenario is that we just go straight there without a pullback, and that's why I would pay attention to this support zone, which is the breakout above 467. Above 467, we're likely just going straight into the 470s. And if we break below 467, then you can look for pullbacks towards 462 to 458. On the NASDAQ100 triple Qs, we were up 1.27% today, and the triple Qs are following this path that I drew out last night of going towards 404. And I told you even if we went straight to 404, it was still possible after that we could get a pullback all the way back down towards this gap fill at 378. But the only way you're going to know we're getting a pullback is if price action starts to break down through some support. And the first support level that would have to break would be right here, right around 396. And then below 396, we would need to break down below 391. Absent of that happening, it's possible we just continue to push through the previous all-time high, which is just above 408.7. So again, with the Dow Jones making a brand new all-time high, it's very likely the S&P and the Nasdaq are going to do the same exact thing. But just don't rule out these scenarios where we could go a little too far overextended now that we're squeezing out the shorts, get a pretty sizable pullback, and then still go blast through those previous all-time highs later this year or early next year. So these are the scenarios you really need to have in your trade plan. And as I always tell you, nobody knows what the market's going to do. That's why you need to be aware of these situations and only follow the price action. If you've been following price action this year, you've stayed bullish for the majority of the year, and that has paid off now that we see the market breaking out and we're starting to see more all-time highs across the market. In the Dow Jones, we were up 1.45% today, and in the Dow Jones, I told you above 363, we would likely go straight to 367, and then above 367, we're looking for 370, and as you can see, we blasted through all of those targets today and broke out to a brand new all-time high, closing outside the upper Bollinger Band. So we can go ahead and delete this arrow because we've hit the price targets, and now that we've hit the price targets, as I've said many times, do not be surprised if we need to pull back and test these breakout zones and cool down with this overextension outside the Bollinger Band. That could easily take us back down towards 363 to 360 before we continue higher towards 376. As always, let the price action do the talking, and if you're planning on a pullback, you need to see price breaking down through 370 and then down below 367. On the Russell 2000 IWM ETF, we were up 3.39% today, and above 186, we were looking for 189 and 191, and we blasted through those targets, closing up here above 193, and the next upside price targets will be 194.7 and 198. With the small caps joining the rally, this is now going to be a more broad-based bull rally, and the next critical resistance to break is going to be above here between 197 and 198, and that means the small caps could finally be breaking out of their weekly range and start running into the 220s. Critical downside support in IWM will be 189 and 186. On the ARKK ETF, we were up 3.7% today, and ARKK started to break down below this very vertical support trend line, but immediately found buyers around the rising 13 EMA and closed out with a bull breakout above 49.2, which means that does validate our next upside price targets up here at 50.7 and then 52.3. 50.7 is the previous July high, so that's going to be a critical resistance, but as I've said before, we're seeing breakouts across the board in other areas, so don't be surprised if these small cap growth names start joining the rally as well. In the VIX, we were up 0.83% today, and the VIX is hitting that lower Bollinger Band for the second day in a row, and as we can see, the VIX is breaking down below this multi-year support that we've had all year long, which is right here, right around 12.8, and the VIX is now at levels we have not seen since the year 2020. This is a bullish indication because this means low fear, but as always, if we're going to get a pullback and we break a critical support level, the VIX could easily spike to 15 and 16, which is not necessarily bearish, it's just something you should be aware of and an indicator that you can put in your back pocket. On Bitcoin, we're currently up 3.29% as Bitcoin is getting a very strong bounce off the rising 20-period moving average, so we are holding that support at 40,000. The next bull breakout above this bounce is if we break that resistance at 44,500, and the next price target above that bull breakout will be 47,500. And if we break support at 40,000, then we're likely coming back down towards 38,000. On Nvidia stock, we were up 0.9% today, and Nvidia is going to be struggling around this resistance right here, right around 484. And if we could break through 484, I'm looking for a push all the way back to the top of the range at 504. Above 504, we're getting a very bullish breakout from this range, and we're likely going to start running higher towards 600. But wait for the confirmation of that break, because it's also very possible that Nvidia just stays within this range. We put in a lower high and come down towards this gap fill at 424, which is obviously going to require price action to break this support at 454. So watch the upper range. If we continue higher, we need to break 504, but if we get a lower high and we pull back and we can't hold this support at 475, then we're looking for a retest of 454, and below 454, we're looking for 435 and a gap fill below 424. It is very possible this stock just stays in a range for a long time before we get a breakout, which could be sometime early next year around earnings, so don't be surprised if this stock just stays within this range until this range is broken, and then after the range is broken, we could easily get a $100 move in either direction, depending if we break down below the range or above the range. On Tesla stock, we were up 0.96%, and Tesla did bounce off of this support down here at 230 because we were getting outside that lower Bollinger Band. It was significantly decreasing the probabilities we could go fill that gap at 225. But now that we got the bounce and these Bollinger Bands will likely start expanding, if we cannot break the top of the range at 244 to 246, it is still possible we get rejected and come down here towards this gap fill at 225. Pay attention to that critical support zone between 230 and 234 and the critical resistance at 244 to 246. If we get the bull breakout, I'm looking for 255 and 260 as the next price targets. On Apple stock, we were up 1.67% today, and Apple did get that retest bull bounce from 191.5, and we did break 194, and now we're breaking above the price target at 197, and we're getting very close to brand new all-time highs, and today was a brand new closing all-time high. So from here, the longer Apple can stay above 194 and 197, the more likely it's heading to the next price target higher at 204. If at any point we lose the support zone at 190 to 191.5, then and only then are we looking for this gap fill down here at 186. So jumping back over to the S&P 500, this was a very bullish day, and there is no doubt a lot of short sellers getting squeezed out of this market, and that is why we are so parabolic outside this upper Bollinger Band and getting overextended. Anytime we get a situation like this where the market is forcing people out of their short positions, that is forced buying. These are people who wanted to see the market going lower and were obviously wrong and had to cover their position before they continued to lose too much money. So try to follow the trend. As I've said many times, it is very difficult to short a bull market. And I think a lot of you that have doubted this bull market all year long and have second guessed my analysis that we were likely still in a bull market are now starting to understand why I gave all of those warnings and why I was warning that we were likely going higher. It's very difficult to predict where the market's going to go, but there are ways where we can put the odds in our favor. And one of those ways is by simply following the trend and not having a bias about where we think or want the market to go. So if you got caught off guard today, just learn from it, because there were a lot of indications that I've been posting all the last few weeks that we were getting bull breakouts and likely going higher. I won't deny this is a very vertical rally with very few pullbacks along the way, but just because we're looking for or even expecting pullbacks doesn't mean you need to short a bull market. You could simply reduce your long exposure and raise cash, but as long as we have a bull trend, you're going to do much better in this market by having a long-term swing position that you're allowing to capture these moves. As I've said before, we are crushing the market in Bank Trade Alerts, so if you want to come crush the market with us, you can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. I also have the Stocks Channel Discord where you can get access to all of my intraday updates and analysis. You can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.